Hey everyone, welcome back to Trading Options Network. I apologize I was not here this morning. My son has a baseball tryout this afternoon, so we were getting ready for that, and my family's going to come before business for me. Now that being said, of course, if you are a platinum subscriber, you would have gotten the trades that I had submitted today, sent via text. So just make sure you're a platinum subscriber so you get all the bells and whistles here. You get all of the notifications. That being said, before we go ahead and move on with this training, let's go ahead and get the disclaimer out of the way. Everything we discuss is solely for educational purposes only and is not the opinion of Trading Options Network. So with this information that you are going to receive now, do with it what you will, but take responsibility for your actions. That being said, of course, you do need to go to your favorite social media and like, follow, or subscribe to stay up to date. That being said, let's go ahead and get into what the market is doing today. So first thing I want to do is I want to bring up the heat map. As we can see here, it's pretty 50-50. There's really no rhyme or reason. I mean, even within sectors, it's half green, half red, it seems like, with the exception of utilities. Utilities getting dumped on, it seems like. Energy is actually not doing too bad today. And speaking of energy, I was actually looking at potentially opening up a position in energy. I kind of like where energy is going right now. We'll talk about that in a minute. Same with the financial sector. Even though JP Morgan, Bank of America, Wells Fargo all came out with earnings that caused them to go down, the financial sector as a whole seems to be keeping strong. So, we might look at some trades there. Keep in mind, we are now in earnings season. So whatever trades you make, you have to remember that you want to make sure that your trades, the specific symbols that you're trading, are not going to be going through their earnings call. And again, if you do, you're more gambling than anything. But that being said, let's actually go ahead and get into the positions that we opened today. So the first one was RCL. If you recall, we had that one on our bull watch list. RCL is looking great right now. There we go. It does look like it is forming a doji, but that being said, we went ahead and we did more of a neutral to bullish position on this one as opposed to a straight bullish position. So the options contract that we started, and as you can see, I actually split up into two. I meant to do 8 and I only did 4. So this one, that being said, doing the 8. I'm giving this one about a 2 on the confidence score. So that is about 2% of your portfolio, or in my case, being that this is a $200,000 paper trading account, we did it at about $4,000. Okay. So we did 8 contracts at about just over $5 each. So 8 times 5 is 40, times 100, of course, is 4,000. So we did 8 of these contracts, but again, you are going to want to do the math. So if you're trading at a $10,000 account, 2% would be about $400. So you have about, it'd be $200. So you would kind of be a little bit hard pressed to even open up this position. At $10,000 at $10,000 account. It's a smaller account, so you are going to have to take a little bit of risk. So you just have to watch it that much closer. But I always recommend, to have a $25,000 account minimum. That's how much it takes to day trade anyways. So I like that position there. Minimum of $25,000. But I mean, even if you only have $1,000 to trade, that does not mean you cannot trade. Okay. But going back to RCL, let's look at the chart. Okay. I do like this chart. Now, it has pulled back just ever so slightly, but the reason I like it, even though it is looking like it's forming a doji, which, can always be a reversal signal, this one is probably one of the weakest of reversal signals due to the fact that it came down hard, but the bulls brought it right back up, and we still have almost an hour left of trading, and it can go even higher here. So what we did, we opened up let's go ahead and look at it, a diagonal spread, where our shorts are going to be expiring this Friday, and those are the 170 strikes, and we bought the August 2nd 165 calls. So The reason we bought the August 2nd 165 calls is because if it is, for the most part, flat, we are not going to be being crushed by theta. Okay, it's almost 3 weeks till expiration on there. However, if we are flat, then we are going to earn, we got this at about an average of 97 cents, these calls here, the short legs. So just rounding it up to make it easy for the time being, that would be about $800. Okay, so literally if we were flat for the next week up until this Friday, we would make roughly $800. We'll take a little bit off of the 167.50, the long calls. So we'd still be up, $600-700. Now, best case scenario, if it does push up a little bit higher, maybe 169, 170, but it does expire around that 170. Well, this is going to gain, a decent amount. I think if I recall, when I looked at it, the delta was about 0.5. Delta will tell you that for every dollar it increases, you should expect about that much in terms of the options premium to increase by about that much. So if it's at about a 0.5, then we should expect about a 50-cent increase per dollar. Now, obviously, as it continues to move up, the delta is going to change. But for all intents and purposes, if we were to expect a 50-cent gain per every dollar increased, that's $2.50. So we'd be looking at about $1.25 in premium. So that would be $1.25 times 8, plus an additional almost $1 times 8 as well. So it's about $2.25 times 8, which would be almost $2,000. Okay, so that would be the best case scenario. Worst case scenario, of course, is just decides that we do want to start trading back down. In which case, we're going to close the trade for a loss. But again, I gave this one a confidence score of a 2, so we're not putting too much of our account into it. And then we'll obviously assess it as it goes. The other trade we went ahead and looked at today. Oops. I didn't put it up here. I'm going to get it rid up there. ALB on my watch list. All right, so ALB. Okay. Let's go ahead and maximize this sell. Here's ALB. Now, go figure. It's definitely jumped a little bit since we opened up this trade, but I'm not too worried about that. I gave this one a confidence score of 1.5, so that's about a $3,000 based on the $200,000 paper trading account we're following here. Now, I did make these trades on my personal account too, don't get me wrong. I will make all of my trades on my personal accounts, but to make it easy, we are going ahead and tracking this paper trading account because you'll never see a withdrawal or a transfer or anything like that from this account, so it's very easy to manage. But nonetheless, we went ahead and we opened up. This is called a ratio spread. You'll see it here in a second. But I like this to come back down to around the $90 level here, possibly even break through that. I don't know. But it is more of so it's a stronger bearish play than your typical spread. But I only gave it a 1.5% confidence level. And you might ask me, well, why would you make it more bearish but less of a confidence level? Well, the chart says that we should be going down. Okay? Pardon me, by the way, I have the hiccups. We had a little bull fake out here, a bull trap on Friday, and it's gapped down today. Now, yeah, it's kind of gone up. It's gapped down a decent amount. But when it hit that 20 today, the 20-day moving average, it was rejected pretty hard. So I feel personally that this is going to continue moving down. Now, what is a ratio spread? Well, it's very simple. A ratio spread literally means you're going to have more short or long legs than the other. So in my case, I have 2 long legs for every 1 short leg. Okay? Say it again, I have 2 long legs for every 1 short leg. So my ratio is obviously 2 to 1. What I did is it is a ratio vertical spread. So I bought next week's, so July 26th. Okay, so that's 9 days till Expo 11 if you count the weekend. But 9 trading days till expiration. And I bought the 95 put and I sold the 90 put. And I actually really liked the premium on that 90 put. So I actually wanted to sell more. However, I do feel strongly this is going to go down. So if it were to go down towards that level of that $90 price point, by having less of the short legs, my long legs will be able to profit from them more. Now, this one's definitely one you're going to want to watch because, of course, if it does go over the 20, we're going to at least bare minimum want to close our additional 6 long legs, okay? And we'll create a true vertical spread as opposed to a ratio spread. But as of right now, I do like this one to go ahead and challenge these lows here because we had that what appears to be a bull trap or a bull fake out, whatever you want to call it, back down to this. And this is a bearish candle. Now, yeah, it's green for the day, but if I were to actually go and oh, geez, where is it at? I think it's under here. Go to appearance. Yep, there we go. And it was there. Boom. It is a red candle overall because obviously we are down for the day. I mean, it's down 2.75%. So don't let that green fool you. Okay, now obviously it doesn't take a genius to see that even though it's green, it's still down for the day. Okay, it doesn't take a genius to see that. But the bottom line is don't let that green bar fool you. Yes, it's higher than what it was when it opened, but it's still red for the day. It rejected off the 20. So again, I like this to roll over and continue to move down towards that $90 level or price point. So that's why I did the ratio spread. Again, it's only a 1.5% confidence level. So 1.5%. So in my case, for this $200,000 trading account, it's $3,000. We'll see where it goes. I mean, so far, the funny thing is, and it always seems to happen, when you open up in a trade, it seems to go against you. It looks like RCL did it first, but has since continued to move up. So let's go ahead and look at RCL really quick again. Actually, let's go ahead and open up the 5-minute candles. So yeah, sure enough, if we look at this, we opened it right about here, and it did kind of just die down. But again, we know that this is a bullish pattern. This is a consolidation. It's been consolidating here, went up, started consolidating. I feel like the next move is to go up more. So overall, I like both of these trades. Again, if you were a platinum member of Trading Options Network, you would have been notified the moment we had opened these trades. And of course, ALB decided it wants to go the opposite direction. So if we look at ALB, let's go ahead and just click right there, make it easy. Yeah, so we opened these trades at about the same time. And sure enough, this one wants to bounce a little bit. But again, overall, it does look quite bearish. I mean, it shot down and it just come up and then it just got shot down again. So, hey, maybe we're having a little bit rally and then it's going to shoot down again more. That's how I look at and read the chart. Does it mean that's going to happen? Of course not. Of course not. Again, I can't stress this enough. I do not have a crystal ball. I do not know what's going to happen. I cannot predict the future. Notice also, I will point this out though, the Bollinger Bands are starting to come together closer. Okay? Usually when the Bollinger Bands get closer together, we are expecting a move. Now the move can be in either direction, like over here. If we go back just a little bit, let me go ahead and open this up to the 1 year. There we go. So right here, when the Bollinger Bands, it was going down, 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 consolidating, Bollinger Bands got kind of tight, and boom, it popped up. Okay, so even though the Bollinger Bands are coming, here's another one. Okay, went down, 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 started consolidating, Bollinger Bands got a little tighter, and then boom, it popped up before it came back down again. Consolidate, boom. Now, does that mean it's going to happen? No, because look what happened here. Actually, both of these. So it consolidated, got tight in the Bollinger Bands, and it shot down. Came back up a little bit, rebound a little bit. Bollinger Bands got tight, and boom, shot down. So, again, I don't have a crystal ball. Nobody does. We can only go based off of what we're seeing. And in my opinion, we should be seeing another downward move. And that is why I gave it a ratio spread. And if we do go past that $90 price point, okay, and it starts going below that, it's very possible that I will actually close my, actually, no, I probably won't close them unless it drops below it and then starts coming back up is probably when I will go ahead and adjust it. Of course, ALB does appear. It's so funny how this works sometimes, right, guys? You know, you think you have a great trade, and the moment you open that trade, it seems like it wants to go against you. And again, all you can do is kind of laugh at that. You know, I don't care that it's doing that right now. It's a little bit too much there. Okay, there we go. Again, I don't care that as of right now, when I open this trade, in the last few minutes, it's gone up. I don't. That means nothing to me, okay, because the overall trend is still down. Now, if it continues to move up and up and up over the next few days and we starts breaking through that 20, then yeah, okay. Then you're telling me, let me go ahead and reset this. There we go. If it starts coming back up and fighting with these highs that we had on that bull trap, what appears to be a bull trap, then yes, we're going to close that trade or at least adjust that trade in some way. But as of right now, I see this moving and rolling over and moving downwards. So that being said, let's go ahead and look back at the current market right now. All right, again, we look at the heat map. I would say there's more green than red for sure, but it's definitely not geared towards one specific sector, with the exception of utilities being red and real estate energy being green. Most of the others are kind of spotty. But that being said, the S&P itself, of course, because why wouldn't we hit a new all-time high today? It just seems to happen every single day. But we're not doing much, okay? And that's probably due to the fact that the bigger companies are, some are up. NVIDIA's down almost 1%. Apple's up almost 2%. Google's up almost 1%. Tesla's up 3%. Meta's down 0.5%. Microsoft is pretty flat, But overall, we do have kind of a half and half that are up and half that are down. Or I should say half are up and half are down. But nonetheless, throughout the overall S&P, it's hit or miss. Some are up, some are down. The market itself, nice doji. We actually have some longer wicks here, so that tells me that we're playing some tug of war here. And again, coming into earnings, we do have some companies that are going to be discussing earnings. Let's go ahead and let's see if I can just pull up a couple really quick. Not too worried about Goldman Sachs or BlackRock. UNH is a bigger company. Bank of America is going to be tomorrow morning. Morgan Stanley's tomorrow morning. On Wednesday, Johnson & Johnson is a very big company, but it's not going to have much of an effect on the market overall, nor is ASML. Netflix on Thursday afternoon after the market closes. That one's going to be fun to watch for sure. Taiwan Semiconductor Manufacturing Company. Well, it's not NVIDIA, but I guarantee, as big as of a company as that is, it will probably affect the semiconductor sector overall. Schlumberger, American Express, we got some coming on Friday. And then I think next week is when some of the other big companies, the big tech companies, start reporting. Yeah, there's Microsoft, Google, Tesla, Visa, starting the 23rd. So we definitely have AbbVie, AstraZeneca, MasterCard, Honeywell. Definitely have some bigger companies coming up in the next couple of weeks. So get rid of that. Overall, the market's flat today. Gapped up, came down a little bit, went up a little bit, but in the end, we're right back where we started the day. It is still bullish, though. You cannot deny that. It is still bullish. We still did set all-time highs today, and we are still up almost, 0.5%. So you cannot deny that it is still bullish. Hence why we did go ahead and open up one bull and one bear, because we do still have a bullish outlook on the market overall. And ALB is definitely showing us that even bears can have little rallies, because we're already down 210 on that one. Again, I'm not too worried about it. If we get down 1,000, then, again, if it goes up over the 20-day moving average, then we'll discuss it. But overall, I like where we're at. I like where our trades are. McDonald's is actually coming back a little bit too. I forgot to change that. So McDonald's, we are still down, but we are up a little bit for the day. But McDonald's, if I go ahead and open up that chart really quick, it is looking bearish again. Got a little nervous actually earlier in the day when it seemed to want to bounce off of the 20 and start moving up, but has since come back. It did not overtake the highs from Friday, so this is still looking pretty bearish in my opinion, so we could very easily roll over. We'll see how that one goes throughout the week. But overall, maybe we'll go ahead and roll McDonald's one more time. If it just kind of lays up in here and it doesn't really move down much, maybe we'll roll it one more time. But overall, again, I'm happy with our trades. It's all looking good. The market is flat, so we're not going to be doing too much. Trying to think if there's anything else I wanted to discuss this afternoon. I can't think of anything off the top of my head. So if you do have any questions, as always, be sure to ask, reach out, post a comment on the video, do whatever you need to do, but ask. That's what I'm here for, guys. So I'm going to let you guys go. I hope you guys enjoyed this training and learned something. I hope you guys have a great afternoon, and we'll talk more tomorrow.